Hi friends, good morning. Today we are going to do the review of the market performance and the Saral levels, how did it in the last trading session, which was Friday, the expiry day. And before the expiry day, happened, we had U.S. markets were closed for U.S. markets were closed for Juneteenth. So when the markets were closed, the US markets were closed, but because futures are traded internationally, we had the Europe session and the Japan session, which happened overnight. And the markets were completely broken down. We closed around somewhere, and the markets, they completely broke down the markets and took it to the lowest level, which was 5968, on the September futures. And it was kind of, I traded this market, I got trapped somewhere here, but I was able to average out and hedge it. But as the market, US markets opened on the Friday, Thursday evening, there was a big gap up, and this gap up continued, and we got a very solid move all the way up to 6072, because June 20th was an expiry day, and the expiry for futures and the futures options for June series happened in the morning. Now, the morning expiry happens because these are traded by a lot of international countries and participants. So there was a big move. We sailed this move. I got out some of my positions earlier on the gap up that happened, and then I sold remaining contracts later. But we also booked profits in the RTY futures that we were holding. So and then the market again sold off. Now, whenever there is a US market is closed and there is a session that happens, international session. So whenever we are issuing the levels in those kind of markets, we what we typically do is we wait for the US market open, because market has to digest what happened in the international session, and then we issue the levels. So the levels were issued around 9 a.m. In the morning, and these were the levels that we gave. So on the upper side, the resistance was 608091, 88 and 10. And the lower side, we gave supports of 6019, 6012. I mean, you have to round off to the nearest tick value. So 6012 was the level, and third support was almost 6000, right? So let's see how the markets played out. Now, we opened in a complete big move, 7-2, and there was an expectation the market will carry, but immediately as we opened, around 15 minutes later, markets started correcting and went into a major correction. Now, we waited. Saral traders, Saral levels started hitting around, first level was hit, and then even the second level was hit, and then the markets went up almost 25 points, 25-30 points from there, and then again came in the level one, again held on, get major opportunities here. 6020, you went up to 6035, 15 points move, and then again when the correction happened, all the levels were triggered. Even third level was almost triggered, we were just 2 points away, and then we again got a move of around 30 points, and then whole day the second level played out, and we got very good moves. We closed inside the range. Now, the Saral levels are primarily based on volatility, that is VIX. So when we are looking at VIX, we use VIX for ES, SPY, SPX levels. We issue those levels every day in our Telegram group. And the volatility index for RTY is RVX, and then we have VXN for NASDAQ. So these levels are primarily based on how the markets are being performed. There is a video where I've given the logic behind these levels. So these levels work very well. We actually close within the range. Now, whenever you are doing futures, a lot of people have told me that it's very difficult for them to handle the drawdowns. Now, suppose for example you took a long position at level support 1, and as soon as you took support 1, it went into a correction of 20 points. Now that's almost $1,000 fall intraday on ES contract. Now one way to do that is, if you have a small account, is to do MES, micro futures, which is just one tenth. So even you can do that. Manage your size. You can do 1 MES, 2 MES, whatever your size is, so that you can take partial profits also. Or what you can do is you can hedge yourself even in intraday. Now with options available for almost 0 DTE, you can hedge yourself against the position that you are taking, even for the intraday moves. Because typically without hedges, what happens is that it's very difficult to handle. Now this candle gave a estimate that it's going further down, like, because a bearish engulfing, but then we went complete sideways, and then you got this big move. Now it's very difficult. It took probably 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Almost 1 hour market was just in a range, 1508, 7 point range it went, and then it gave a breakout above that. So if you are not hedged, you are always watching the screen and everything. So you, of course, in intraday you will have to do it, but you know what your max loss is, and that's how typically it's done. So it was a very overall very productive day. So keep trading, Saral trading, use futures, and hedge is your edge. You can subscribe to our channel on YouTube, and you can also follow us on Twitter. We share some free levels for some of the indexes every day. And if you're looking at futures swing alerts, where we take overnight trades with hedge, you can also join our futures swing group. I will give the link in the description. Thank you. Thank you very much. Bye-bye.